The rand trading around 684, so hovering around those weaker levels against the dollar. And it looks like there just have been a few negatives this week weighing on the carry trade and the currencies.
Yes, good morning, Stephen. Well, I think the big development this week that I've been looking at is obviously that euro-dollar move. And it's been kind of stalled to the top side, and euro strength has really kind of run out of momentum. And we've seen that the rand has really been particularly strong against the dollar and the yen, but against most of the other currencies, it's actually been underperforming over the past month, over the past 3 months. So really this euro-dollar play, having run out of momentum, has got important implications for that dollar rand, and that's why we're going to be continue to take our cue from the cross in this regard.
Well, we also had some negative news out yesterday. We had mining production growth moderating to 2.8% in February from 3.2% in January. So looking a little bit soft over there. We also had the Finance Minister, Praveen Gordhan, talking about a multi-dimensional approach that the government is taking towards curbing volatile flows on the currency. Do you think those factors weighed on the rand as well?
Yeah, if we look at the mining figures, it's quite disappointing to see that South Africa isn't managing to extract more value out of this commodity boom that we've seen. We'd expect mining production to actually be doing quite nicely. So that was a bit of a disappointment, because obviously that will have a bearing on Q1 GDP. In terms of the comments from the Finance Minister, I think it's quite clear that the authorities are going to stick to their guns in terms of accumulating reserves in a consistent and a measured fashion. We've had some relaxation of exchange controls in recent times, and we've seen some of the asset managers, such as the PIC, indicating that they want to diversify. So those kind of liberalisation measures, together with the reserve accumulation, is the channel through which the authorities are quite happy to kind of stem excessive rand volatility and ultimately excessive rand strength. So it doesn't look like at this stage we are still going to go down the route of the capital controls measures, and to be quite frank, those measures haven't really worked in a number of other countries. Those currencies have still remained fairly strong. So I think to answer your question, we had some disappointing mining production figures. Those were accounted against the rand, and yes, there's just going to be a continued efforts from the authorities to stem rand strength, and that in the short term is probably rand negative as well.
We had some economic data out of China this morning. Growth coming in at 9.7% in the first quarter of the year, so still looking pretty strong on that side. We also had inflation looking pretty strong, though. March's inflation 5.4% year on year, and that's a touch higher than the market was expecting. Impact for the rand on that?
Yeah, well, you see, the difficult thing there is the growth argument bodes well for commodity demand and commodity prices, which should be good for the rand. But on the other hand, with inflation now ticking up as well, quite aggressively in China, we could very well see more monetary tightening coming through from the Chinese authorities, and of course that could cool growth and maybe cool some of the demand for that commodity, those commodity prices. So the one kind of offsets the other, and I think on balance a marginally a rand negative, because I do think that on balance the Chinese authorities are probably going to continue with their tightening approach that we've seen over the past few months.
Inflation obviously becoming a bit of a concern globally. We're getting the US CPI numbers out tonight, and that follows producer price inflation numbers out yesterday. What are you looking for there, Michael?
Yeah, well, in terms of producer inflation, they were slightly softer than consensus, but the trend was still up, and we're expecting US CPI inflation also to show an increase on the previous month. So the bottom line here is that inflationary pressures are creeping up the world over. We mentioned already the story in China. We've seen it in the States. We know it's very prevalent in countries like the European region and the UK. So this, I think, is going to be a theme to look out for going forward. Central banks are going to have to start looking at tightening rates, even though growth is not shooting the light side again. They're going to have to be mindful of inflation running away as a result of these high commodity prices. as a result, we could actually see the rand losing some of its carry trade appeal because we don't think that the South African Central Bank is going to be hiking rates in the short term. So those yield differentials could compress and, as I say, just reduce the appeal of the rand carry trade to some extent.